Hey listeners, it's Paul Andriola here. Why not join our community at Small Cap Discoveries, where we offer our members direct access to some of the best microcap investment opportunities available. Our members are getting access to premium microcap financings, research reports, and direct access to management. Sign up today at www.smallcapdiscoveries.com.
Hi, everyone. Welcome to the Small Cap Discoveries conference call. Today is June 10th, 2024, and today on our call, we have back the CEO, Maury Marks from Quorum Information Technologies. Quorum trades on the TSX Venture Exchange under the symbol QIS, and it also trades on the OTC under QIFTF. The company is currently trading at 77 cents with about 74 million shares outstanding. We're about a $56 million market cap. I'd now like to hand it over to Paul Andriola.
Hey, thanks a lot, Trevor. Great to have Maury back. Maury, we invited you back, not just because we like you, but more so because you guys had a really outstanding Q1, especially in the bottom line. So, we wanted to get you back to explain what you guys did. What happened. So great to have you here. But before we dive into sort of some updates, why don't we remind everybody, what Quorum is all about?
Yeah. Well, why don't I share a couple slides and then we'll dive into those, and I'll do a quick update for everybody.
Perfect.
Let's just make sure. Yeah, there we go. All right. Okay, so what I'm going to show you is I'm going to show you our investor deck. I will show you a URL where you can go get the full presentation. For today, I'm only going to share a couple slides from our investor deck and really try and tell the Quorum story, and also, Paul, to your point, tell everybody what we did in Q1. So first off, always have our forward-looking information disclaimer. I'll roll through that. And now we're over to our about Quorum. So this is where I'm going to talk a little bit more about what we're doing out there, right? So I'll talk about our story for anybody that doesn't know us or anybody that needs a quick refresher. So first off, let's start with what we do. So Quorum provides software and services to the automotive retail industry, to the same franchise dealerships where you buy a car or get your car serviced. The franchise dealership is actually quite complicated in that they need software in their vehicle sales area, their service area, their body shop, their parts inventory, and accounting departments. So not only do they need an ERP system across all those different areas, but they also need sales and service CRM systems, digital retailing tools, and multiple other solutions. In addition, those solutions need to be then integrated back to their original equipment manufacturers or OEMs like a GM or a Ford. And keep in mind that those OEMs are the sole source of the dealership's new vehicles and parts, and they're also the ones that pay for the warranty work. So it is very important that you have a great relationship with your OEM and that there is really tight integration to them. What we see in the automotive industry across franchise dealerships is they typically are buying software across 25 different categories of solutions. So imagine running your business with 25 different software products with limited integration between the products and each with their own reporting tool. So for Quorum, what we've done is through a number of different investments that we've made on the product side of things and a number of different acquisitions over the last 6 years, we now have a uniquely integrated product suite of 13 different software solutions that are used in whole or in part by 1,417 different franchised dealership customers. So what we end up doing is we provide the dealership or the dealer group with 13 of the most critical of the 25 categories of software. And our solutions are integrated, and we have a single reporting solution across them. Now, a couple sort of metrics for everybody, right? 91% of Quorum's customers are Canadian, and at least one software solution, Quorum software solution, is utilized by 40%, and less than 1% of the franchised automotive dealerships in Canada and the US, respectively. Some just comments on a few key metrics from Q1 for us. So our recurring revenue rate is our revenue run rate is 38.9 million, split between 28.8 million in SaaS and 10.1 million for BDC. In addition to SaaS revenue from our product suite, we also have our Business Development Center or BDC revenue. So think of the BDC for us like a call or contact center. Our BDC helps book service appointments for dealerships, customers, vehicles. We have a number of large auto group customers. Auto Canada is one of them. They're one of the largest dealer groups in the Canadian marketplace, and they've been a key BDC customer for us for multiple years. 96% of our Quorum's revenue comes from our SaaS and BDC revenue. So we have a really nice stable revenue base. And then our adjusted EBITDA was 2.1 million in Q1 2024, which is 20% of our total revenue, which was a 61% year-over-year improvement. And I'm going to talk a little bit more on the next slide about how we went about improving our EBITDA margin. So let me just go forward here. So this slide shows a history of our acquisitions, and it highlights the cross-selling opportunity that we have. So first off, I want to just start by talking through some of our acquisitions. In the bottom left-hand corner of the graph, Autovance was our first acquisition back in 2017. Autovance provides sales retailing solutions to dealership and was a great strategic fit to our product suite. They also have a digital retailing solution to sell vehicles online for our dealerships. Rick Johnson, the former president of Autovance, is Quorum's VP of Product Management. And then DealerMine acquisition, which was made in 2018, was transformative because DealerMine was close to the same size as Quorum. DealerMine provides CRM solutions and BDC services to dealerships. Jane Webb, who was previously the Director of Sales and Marketing for DealerMine, is Quorum's VP of Sales and Marketing. And then Bruce Atkinson, the former VP of Operations for DealerMine, is Quorum's VP of Operations. Our third acquisition was Oasis, which we later renamed Advantage. And that was a case where we acquired a competitor and converted their franchise dealerships to our DMS product and our other product suite. Accessible Accessories was acquired in 2022. It provides digital retailing solutions for selling vehicle accessories to customers. And then our last acquisition, VIN, provides an automotive marketplace for consumers similar to AutoTrader, but a lot smaller scale than that. Just a couple more things to point out on this slide. Quorum added over 1,000 dealership customers through acquisition, and consequently, many of our customers only leverage one or just a few of our 13 different solutions. So the result is that Quorum has a $54 million annual SaaS revenue cross-selling opportunity. So that for us is a 2 times growth opportunity just within our customer base, because Quorum's Q1 2024 SaaS revenue run rate was 28.8 million. The result of having this large cross-selling opportunity is that we really started focusing on a more profitable growth strategy. And we started that focus back in 2023, and we carried it forward into 2024. So we're focused on cross-selling to existing customers, but then also better customer-wide cost management. Now that's a pivot from the past where we were focused on growth through product development and new dealership acquisitions. Under this more profitable growth strategy, we continue to pursue new dealer customers, but cross-selling is our #1 priority. What's interesting about pursuing new dealership customer opportunities out there is we're now focused on selling smaller, easier to sell products to a new dealership. And then we expand our revenue by selling additional products into that dealership. And I guess a couple advantages from that. The first is it's just easier to sell smaller products to a dealership and get a foothold into the store. But the other advantage is a lot of our smaller products are both DMS and OEM agnostic, meaning that they can be sold to almost the entire available franchise market out there. So the ultimate result of profitable growth strategy and better company-wide cost management has been improved profitability. So as I mentioned before, we reached 21% EBITDA margin in Q1 2024. In fact, that was our second quarter in a row of reaching 21% EBITDA margins. And then another advantage to being more profitable is that we have some debt, and we had the debt in place to fund our acquisition. So we have a secured debt facility with BDC Capital, and then we have unsecured debt through a COA government through the COA government programs. The improved EBITDA margins meant for us that our net debt level, which is our debt minus our cash on hand, dropped by 1.4 million or 20% from 7 million at the end of Q4 2023 to 5.6 million at the end of Q1 2024. And in fact, our net secured debt at the end of Q1 2024 is now 4.3 million. So we've made a great dent in reducing our net debt level. And then, Paul, I think I'm going to hand it back over to you. I think that's what I wanted to share with everybody in terms of a quick update. I'm sure you've got a number of questions.
Perfect. Maury, I missed the last part. You said I didn't get the cash and debt part. I'm scrambling and writing notes here.
Yeah, no problem. No problem.
How much net debt do you have? How much cash do you currently have?
Yeah, so our net debt level. I'd have to go do a quick look, but our net debt level between our debt that we have and our cash is at the end of Q4 2023 was 5.6 million.
Okay.
Now that's full debt. That's secured and unsecured. Our net secured debt is now 4.3 million.
Okay, gotcha. There we go. Okay, perfect.
I do have a slide, and I don't want to throw too much information at everybody, but there is a slide of in top left-hand corner, right? Cash balance, debt levels.
Yeah, there we go.
And all the different breakdown.
Perfect. So, I mean, as your cash balance, I guess, increases here, can you expect the same? Can we all expect sort of the same type of capital allocation? Are you going to be paying down debt, or is there other uses of the cash?
Yeah, so I think the focus at this point in time is to pay down our debt.
Mm-hmm.
We want to clean up our balance sheet a bit more.
Mm-hmm.
So that is our primary focus. Keeping in mind that we're still making a pretty heavy investment in product improvements. But yeah, that's the focus.
Mm-hmm. And you've made a number of acquisitions, obviously, in the past. Is that something you're going to look to continue to do, or do you feel pretty full as far as product suite right now?
We would like to continue making acquisitions. I don't have a time frame on that.
Mm-hmm.
I mean, obviously, if their companies come available, especially if they are a really good strategic fit and accretive to us, both revenue and EBITDA wise, we would definitely take a hard look at them. We have I mentioned at the onset, right? There's 25 different categories of software the dealerships use, and we have 13 of those. So there's still 12 different product categories out there that are of interest to us. Additionally, one of the interesting things about our acquisitions is they've all been Canadian companies where we, for the most part, supply those same products to US dealerships, but we have yet to ever make a US acquisition. So that's, longer term of interest to us as well.
And so let's talk about some of the, I guess, either product developments or new initiatives. We always try to find out what companies are doing that are new. Where do you see the business going, either product-wise or any other sort of new step forward that you guys might be taking?
Yeah, so a number of things that we're working on the product front. I sort of have to go by across our brands and talk you through what we're doing on the product front. So Autovance, what we continue to do with the Autovance product suite is we continue to expand the footprint. We want our Autovance Desk product to handle more of a transaction for a dealership. So right now, it handles all of the quoting and all of the presentation through to the customer, and we're going to be adding F&I forms development in there as well, so that Autovance can just do more and more of the sales process. In addition, we're integrating in some manufacturer warranties. So to start with, I think GM and Chrysler are our first manufacturer warranties that we're adding in to the product. What's nice about that is now when I'm selling to you, and I'm selling you not only the vehicle, but I'm also selling you different F&I or finance and insurance products, I have the warranties all at my fingertips. So that'll help dealerships sell more extended warranties through to their customers. On the dealer mind side of things, a couple of really interesting pieces to what we're doing. Our sales CRM dealer mind tool is getting a new dashboard. So the dashboard is really a window that brings it all together for the dealership management and for the dealership staff. So that's going to be released in Q3, Q4 timeframe. We are as well building in different AI capability into our dealer mind service CRM product. And that is especially important as it pertains to that BDC or that contact center. There are so many things that AI can do to actually help interact with the customer and do a better job of interacting, or help our BDC staff interact with the customer, help them do a better job of interacting with the customer. So we've got a number of AI plugins that we're building in. Accessible accessories is getting tires added to the accessories that can be sold through Accessible. So today it sells all of the different OEMs accessories for a vehicle, but we've never had a tire solution in there. So we're adding that in, which will be very helpful. Yeah, so there's some examples of some really good change that we've got going on.
I mean, let's go back to Q1 a little bit. You guys, a materially different quarter than you've had in a long time. Is that repeatable? Like, or kind of what you've done in Q1? Can we expect similar sort of metrics going forward?
Yeah, so Paul, I mean, one of the things that we're always looking at, I'm sure every business is looking at, is what is our run rate? What's our EBITDA run rate month over month? And what we did is we made a bunch of changes in 2023, so a lot of it in the second half of 2023, to really get our cost structure down. So some of those changes were staffing changes. A number of those changes were really third-party changes. So renegotiating some of our deals, or stopping working with particular vendors and consolidating the vendors that we work with, to really get our cost structure down to a different level. So once our cost structure is at a particular run rate as an organization, then that's our run rate going forward. And now we've I guess through 2 quarters, we've repeated 21% EBITDA margins. So we're used to operating at this new run rate.
Right on. I'll remind everybody, should have mentioned it earlier, but if you've got any questions you'd like me to ask Maury, just use the chat function and we'll ask the question. How about, so we saw, really strong, nice quarter there in Q1, but as far as challenges, what sort of challenges are you facing right now with business?
Yeah, I think probably our biggest challenge is trying to improve our growth. It's we would like to be growing faster. It's always that two-edged sword, right? Are you going to focus on growth as an organization? Or are you going to focus on profitability? And so obviously the focus for us has been on profitability. We have sacrificed some growth to get there as an organization, and now we're starting to turn, and we would like to improve our growth rate. And that means, for us, how do we do a better job of cross-selling as an organization? How does our sales team and our customer success teams work together better to find more opportunities and close those opportunities? How do we do things like improve the return on investment all of our products provide through to our dealerships? Because we know if we can provide a higher return on investment, we can sell more through to dealerships. We can also charge more for our products. And then the third piece is making the right product investments, the ones that I talked about before, to improve the salability of all our products. So, I think we're still very focused on profitable growth strategy, but we're trying to move the needle on the growth side of that profitable growth strategy.
I mean, the auto sector is such a economically sensitive sector. What kind of, I don't know if you get access to the information, but what are you seeing as far as trends? Just more on the economy side, you know, like what are we,
Yeah.
what can we kind of expect from the data that you're seeing right now?
Yeah. And those are the headwinds that we're facing, right? Is that you've got dealerships, dealerships who have been through quite a bit. When you go back, obviously COVID had an impact on them, and then post, once we got over lockdowns, then the next impact on them was vehicle inventory and not having enough vehicle inventory, and then it was parts inventory, and there continues to be some of those challenges. But now I think the new challenges out there are that, you know, we've got an economic environment where it's very hard to sell vehicles into. Vehicle pricing has gone up significantly. Interest rates have gone up significantly. And as a very wise dealer told me, that they're running out of the customers that need vehicles, and now they're into the customers that want vehicles. And when you got high interest rates and higher prices on vehicles, it's harder to sell vehicles.
Yeah.
Now, I mean, with the latest Bank of Canada announcement, you know, I think there's going to be a little feeling of relief. But we definitely need to see interest rates coming down, and we need to see an improvement in just dealer sentiment, where there's just some more optimism across our dealerships, and they move out of that cost cutting mode and into a more optimistic frame of mind.
Is the sort of the trend toward more, call it online sales, or kind of away from the traditional dealership role? How does that affect you guys, or do you guys play into that? What, you know, what is that doing for you?
So we do have a product called My Deal, that is a digital retailing tool that we sell, and I'll tell you our experience on this is, our experience was during COVID, during lockdowns, this was critical, mission critical to dealerships, right? Everybody was investing in digital retailing solutions to sell vehicles online. And for us, we made a big investment in our My Deal product. And sales were going reasonably well of our My Deal product, but the pedals come off. The demand has come off from a dealership perspective, and we're back to more traditional ways of selling vehicles, or we're back to more of a hybrid model of selling vehicles, where they want to start a transaction maybe online, but then move in-house or in dealership for parts of that transaction, which My Deal helps them do. The other trend that we saw during COVID on the digital retailing side of things was on the service lane, or on the service side of the business. Everybody wanted to be able to do a drop off of their vehicle, a touchless drop off, or they wanted the dealership to pick their vehicle up. We're also seeing less demand on that. We have that capability inside of our Power Lane tool, which is a service lane tool. But we're just not seeing as much demand as we ever saw in the past on that.
Gotcha.
Yeah.
And I guess looking forward, what do you think are the critical things to watch as an investor? And we're watching you. What you know, clearly your EBITDA and your profitability now has improved dramatically. Is that what we should continue to focus on? Do we look at any other metrics to see improvement? And or, you know, what kind of catalyst do you think we might see over the next, you know, course of the next 12 months?
Yeah, so I would say over the next 12 months is for us, our EBITDA margins are critical to us, right? Profitable growth means profitable comes first in that particular statement. So that is a big focus for us. I think then, you know, over time, as the year unfolds and into next year, you're going to see more of an emphasis, a continued emphasis on the growth side of things, and you know, not necessarily growing our rooftops, but growing our, what we call our MARPU, our dollars per dealership.
And like, where, I mean, you're a public company. The public companies can last forever, but do you see an exit here? Is there a bigger company that can swallow you guys up, or are you guys the ones that are going to continue to swallow sort of smaller companies?
Yeah, so we spent a lot of time and energy getting good at doing acquisitions. I mean,
Mhm.
Paul, if you remember back to some of our previous talks, we talked about being, especially when we did some of our early acquisitions, being 3 and 4 different companies running as separate divisions, and then we brought everything together under the one Quorum umbrella, and that was a huge effort for us.
Mhm.
It also drove a lot of cost savings for us, and we're seeing the result of some of that, because we were able to, once we brought everything together, we were able to rationalize our costs and drive a lot of costs out of the business. And then in our most recent acquisitions for Accessible Accessories and VIN, we're able to use our new model of how we integrate a new acquisition in, and those both went smoothly in terms of being integrated into the business. So, we're paused right now, really focused on profitability, but you talk about generating more cash flow and paying down debt, but you can also be generating cash flow to do more acquisitions.
Mhm.
And so, I think Quorum longer term will be continue to be a net acquirer. And I think we've put all the pieces in place to allow us to do that very effectively and efficiently.
Fantastic. Well, that's kind of all my questions, other than just one last one is, what would you want to make sure everybody walks away with? What's the key message for today's presentation?
Yeah, so I think the key message is we're a sort of a steady growth story out there. Our underpinnings are around our revenue, our SaaS and B2C, all reoccurring revenue. And what you've been able to see us do over the last number of quarters is really improve our profitability as an organization. And what that enables us to do is, in the short term, pay down debt, but in the longer term gives us lots of options. And we're excited about that. We're excited about our future.
Mm-hmm. Well, I mean, congratulations on a very, very solid Q1, nice profitability. Companies that generate cash always have a lot of options with that cash. So it's good to see it's happening. We've been speaking with CEO Maury Marks of Quorum Information Technologies, QIS on the Venture Exchange. Maury, always great to catch up, and certainly look forward to more progress as we go.
All right, Paul, thanks so much. Thanks for having me.
You bet. Bye for now.